Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money-making machine that are corporations. And let's just say ABM Industries Incorporated's latest report might have some juicy details hidden beneath the surface. A report chock full of numbers that sound like rocket science, but really just tell us what they're doing with their money to make more money. So first off, let's talk about ABM Industries. They filed their annual report for the fiscal year ending the 31st of October 2025. Think of this as their yearly financial report card. Usually these filings are super long and dry, but we're going to zoom in on the most interesting bits. We're talking about their financials, their big strategies, and the risks they're facing. First up, the company ABM Industries Incorporated. They are a big player in facility maintenance engineering and infrastructure solutions. They started as a window washing company way back in 1909, and now they're pulling in over $8.5 billion. That is a massive growth story driven by buying other companies and offering more services. Now let's dive into the numbers. For the year ending the 31st of October 2025, ABM's revenues hit a cool $8.7 billion. That is up 4.6% from the year before. This growth is coming from both new business and from companies they've acquired. Pretty steady growth in a tough market. But revenue is only part of the story. We also need to look at profit. Their operating profit, which is what they make from their core business before interest and taxes, jumped to $311.7 million. That's a huge 47% increase compared to 2024. This means they're getting better at controlling costs and running their operations more efficiently. That is a big win. Looking at the profit margin for their main business and industry segment, it is sitting at 7.7%. Not bad, but not amazing either. However, some segments like aviation and education saw their profit margins improve, which is a good sign. Their technical solutions segment is really shining. Revenues there shot up by 18.7% thanks to a boost in microgrid projects. It seems investing in new energy solutions is paying off big time for them, and their profit margin in this segment is also healthy at 9%. Now here is something interesting. In the fourth quarter of 2025, they launched a restructuring program. This means they're cutting costs and streamlining operations. It is expected to save them about $35 million a year. They've already booked $13.4 million in charges for this. It shows they're actively trying to improve their efficiency. Let's talk about their debt. They have a pretty large credit facility that they recently updated. As of the 31st of October 2025, they had borrowed about $1.5 billion. This is a big number, but they have enough borrowing capacity to handle it. They seem to be managing their debt well for now, but interest rates can always change things. ABM is also buying back its own stock. This usually means they think their stock is undervalued and it can boost shareholder value. They bought back about 2.5 million shares in 2025 and have more money set aside for future repurchases. Now here is where things get a bit tricky. They use a mix of insurance and self-insurance to cover risks like workers' compensation and general liability. The amount they've set aside for these future claims is huge, more than $649 million. Some of these estimates involve a lot of guesswork. A 10% change in these estimates could swing their net income by about $40 million. That is a lot of wiggle room and a potential risk. Goodwill is what is left over after they buy a company when the purchase price is more than the fair value of the assets they acquire. They have a massive $2.5 billion in goodwill. This usually comes from a history of acquisitions. For now, they are not seeing any signs that this goodwill is losing value, which is good, but it is a big number to keep an eye on. Along with goodwill, they have other intangible assets like customer contracts. These are being amortized over about 11 years. They expect to spend about $46 million on amortizing these in 2026. Again, these are tied to their acquisition strategy. Looking at their insurance reserves, again, we see the scale of their self-insurance. The total reserves are $649.5 million. This highlights how much risk they are taking on themselves. They do have some older employee benefit plans and pension plans. The amounts are not huge, but they're there. Multi-employer pension plans are a big chunk of their retirement expenses, about $588 million in 2025. These plans have some complexities and potential risks if other companies in the plan can't contribute. Now let's talk about the risks. ABM operates in a highly competitive market. They face pressure on prices and need to constantly win new bids. Labor shortages and rising wages are a big concern too. They employ over 113,000 people, and keeping good staff is key. They're also worried about cybersecurity threats and the smooth transition of their new computer systems, which is a massive undertaking. They've also been busy making acquisitions. In June 2025, they bought LMC FM Limited in Ireland for about $22.5 million. Then in June 2024, they acquired Quality Uptime Services for $116.3 million. These acquisitions are boosting their technical solutions segment. And here is a big one for the future. They just announced plans to buy WGNSTAR, a company in Ireland, for about $275 million. This shows they're still committed to growing through acquisitions and expanding internationally. It will be paid for with cash on hand and more borrowing. That is a significant move. Overall, ABM Industries seems to be navigating a complex business landscape effectively. They've shown strong revenue growth and a significant improvement in operating profit driven by efficiency gains and strategic acquisitions, particularly in their technical solutions segment. Their restructuring program signals a commitment to cost control, which is always a good sign. However, the large amounts of goodwill and self-insurance liabilities do present some areas of concern that warrant close monitoring. The ongoing acquisitions also indicate a growth-oriented strategy but come with the inherent risks of integration and potential overpayment. Their future looks promising with continued investment in technology and strategic expansion, but they'll need to keep a close watch on those labor cost market competition and the success of their latest big acquisition. Alright, that is our breakdown of ABM Industries Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.